Time now for a look at some of the day's business news with France 24's Cole Stangler. Cole, you're starting with a deal in Washington over that major new infrastructure package.
Yeah, that's right, Aaron. There's an agreement between senators from both parties, a pretty rare occasion in the U.S. these days. Now backed by the White House, the deal would see Congress move forward on a $1.2 trillion infrastructure bill. It's much smaller than the plan initially proposed by President Joe Biden, but is designed to win support from Republicans. Instead of tax hikes, new spending will be paid for in part by beefing up tax enforcement, while unused coronavirus aid funds and economic growth will provide other key sources of revenue.
The investments we'll be making as a result of this deal are long overdue. They'll put Americans to work in good-paying jobs, repairing our roads and our bridges. They'll deliver high-speed internet to every American home, bringing down the price that people pay now for internet service. And they'll close the American digital divide, as been driven home by every mother and father with a child at home during the COVID crisis.
Cole, could you walk us through the details of this plan? Where exactly is all of that money going to go?
Yeah, so some will go to programs already in place, but just under half would cover new investments, much of them in transportation. That includes over $100 billion on roads and bridges, $66 billion on rail, $49 on public transit, as you can see there, while broadband internet and the power grid would also see major boosts in federal spending. But the bill's passage could prove tricky. It needs 60 votes in the Senate, meaning at least some support from Republicans. Democratic leaders have said they'll support it as long as they can approve an additional plan focused on what they're calling human infrastructure, that's healthcare and education. They're hoping to approve that bill through a simple majority vote.
Well, it sounds like there's still a lot of uncertainty then over the bill's fate, but investors nonetheless seem to be pretty happy for now about the passage of the deal.
Yeah, the general sense is this will help extend the economic recovery in the world's largest economy, helping push the major European indexes into mostly positive territory to close out the week. Shares on the CAC 40 here in Paris, actually, just around the flat line as we're seeing now. Some slight losses on the DAX over in Frankfurt, but the FTSE up around 0.5%. Those numbers in Paris coming as data showing a slight uptick in French public debt. Turning to the Asian markets, where we did see some more significant gains, the Hang Seng up around almost 1.4%, gains too in Shanghai, Tokyo, and Seoul.
Meanwhile, shareholders at Toshiba have voted to oust the company's chairman.
Yeah, it's a major defeat for management at the nuclear and electronics giant. After a 3-hour meeting, shareholders in Tokyo voted not to reappoint Chairman Osamu Nakayama, also rejecting another member of the board of directors. Investor revolt comes after an investigation found that Toshiba officials colluded with the Japanese government to reduce the influence of foreign investors. At last year's shareholder meeting, Toshiba is one of Japan's most historically successful brands, though it's struggled from scandals in more recent years.
And next up, Cole, the president of El Salvador is continuing to defend the country's highly criticized plan to make Bitcoin legal tender.
Yeah, Nayib Bukele said the recently passed law will take effect on September 7th. It'll require businesses to accept payment in the famously volatile cryptocurrency. He's justified the move by saying it'll help reduce transaction fees generated by the country's high reliance on remittances. Addressing the nation, the president also said anybody who signs up for an e-wallet on a certain platform will receive $30 worth of Bitcoin on their account.
Okay, and finally from you, Cole, ending on an expensive note, the world's highest luxury hotel is opening in Shanghai.
Yeah, it's at the second tallest building in the world, the Shanghai Tower. The J Hotel occupies the top floors, boasting a restaurant on the 120th floor and offering guests a 24-hour personal butler service. It's run by Jinjiang International Hotels, a firm that's owned by the Chinese state. You're seeing the pictures there. While it was delayed partially by the pandemic, the opening clearly a sign of China's recovery. Also a reminder, Aaron, of the deep-pocketed clientele that continues to exist in the country's largest city, Shanghai.
Okay, well, I don't think I'll be going there anytime soon.
Me neither.
Thank you, Cole,
Thanks.
for that latest business update.